My name is Bob Durante, and I'm a Senior Director with S&P Capital IQ Credit Solutions, managing the Americas Solutions and Services team. We hope you had the opportunity to view our March 18th webinar, 2015 CCAR Results, What They Mean, and the Way Forward. Given the timeliness of this topic, we had great interest and would like to use this video to analyze the poll results and respond to some of the questions that we did not have the opportunity to address during the webinar. Please note that the activities of S&P Capital IQ are analytically and editorially independent from Standard & Poor's rating services. During the webinar, we asked the audience live poll questions and received very powerful insights that we will share and analyze with you. The first poll question we asked was, what is your greatest challenge during the CCAR process? The leading responses were evolving regulation and data needs. In hindsight, these answers were not surprising given that the leading response, evolving regulation, fits one of the stronger themes of the CCAR process of raising the bar or making the CCAR tests less predictable. The next response is about data needs. I think the importance of good data is the starting point for model development, and model validation is fairly obvious, but clearly a concern as identified by these poll results. The next poll question really cuts to the chase of the entire CCAR results, and that is, what do you consider the most noteworthy event from the 2015 CCAR results? The leading response was, for the first time, all 31 banks passed the quantitative tests. For the past 5 years, there was always at least one bank that failed to pass the quantitative portion of the stress tests. Not this year. And there seems to be a growing expectation this might be the norm going forward, assuming the economy remains stable. The other leading response, increasing emphasis on the qualitative components, demonstrates how the CCAR tests continue to evolve, whereas the quantitative portion is becoming increasingly predictable. You can say that is not the case for the qualitative component. In fact, you can argue the qualitative portion is becoming even less predictable. The next poll question, given the modeling demands in the CCAR process, in which area can third parties and vendors provide the most value? Model development and validation were the primary responses. Given the independent nature of validation and the difficulty in attracting and retaining model developers, these results were as expected. The final poll question was, how do you see the regulatory landscape evolving over the next 3 to 5 years? The consensus was that regulations will continue to increase or level off. My favorite response, though, depends who is in the White House. Now to some of the questions that we were not able to address during the webinar. How will stress testing evolve for DFAST banks, those between 10 and 50 billion? I like this question. For the DFAST banks, clearly are not as systemically important as the CCAR banks, those whose assets are over 50 billion. Currently, the degree of scrutiny is more intense for the CCAR banks than for the DFAST banks. Having said that, the degree of regulation seems to be ratcheted up for DFAST banks. We will have a better feel for this response when the results for the DFAST banks are released later this year. Following the release of those results, S&P Capital IQ will break them down and comment on what they mean. We expect the trend of increasing regulation to continue for DFAST banks, but still not at the same level as the CCAR banks. Next question, at what point, if ever, do the updated scenarios start to level off? The Fed explicitly says that it does not want these stress test exercises to become predictable. So it's difficult to say with certainty what we can expect from the next round of CCAR. Given that current scenarios don't capture all possible market shocks, the Fed still has the flexibility to release scenarios that will test banks in ways that we have not seen tested. When the new scenarios are released later this year, S&P Capital IQ will also break them down and comment on those results as well. The next question, what should banks do to prepare for next year's stress tests? All banks receive confidential feedback from the Fed about their submission. These letters will point to specific areas that each bank should improve. Banks should work diligently to interpret the Fed's feedback and implement the necessary changes. Risk identification and model inventory capabilities are a couple of areas that I see getting more scrutiny. That's all for today. Again, this is Bob Durante, and thank you for listening.